Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock, with news that China's growth is slowing, but it's still at a healthy level. But first, in a second day of congressional testimony, US Fed Chairman Powell said that he sees few risks to the ongoing modest American economic expansion. But markets are not giving the thumbs up today, with the S&P 500 turning lower in afternoon trade and benchmark bond yields falling in a risk aversion mood that settles in. Prompting the shift is a sharp and unexpected rise in jobless claims. American producer prices rose by the most in 6 months in October, slightly better than expected, lifted by gains in the costs of goods and healthcare services. But the US budget deficit grew by more than a third in the first month of the new fiscal year as federal spending outpaced revenue growth, pushing the 12-month deficit past $1 trillion for the first time in a non-recession period. The Americans are leaving the roof damaged when the sun is shining. China's key economic activity continued to slow in October as several major indicators posted multi-month or even multi-year lows. Retail sales were up 7.2% and below expectations. Industrial production was up 4.7%, and that was also below forecasts. And the important fixed asset formation data, a key driver of their economy, was up 5.2% when a gain of 5.4% was expected. True, all of these numbers are way above what most other countries can deliver, but they do indicate a continuing slowdown. But it is not sharp, and it certainly isn't a contraction. And it is miles better than for most OECD countries. And it doesn't indicate China is on its knees, as the US administration seems to think. And China says it is in in-depth talks with the US about rolling back the American tariffs. Germany has narrowly avoided a recession, according to official data. The annual growth was down to 1%, but this was better than expected. For the EU as a whole, the growth was slightly better, coming in at 1.4%, and that was also better than expected. In Australia, official data shows that the Australian economy lost 19,000 jobs in October, the first fall in 3 years, and their unemployment rate edged higher to 5.3%. Analysts had thought employment would rise 15,000, so the miss is substantial. This saw the Aussie dollar fall sharply and taking the New Zealand dollar with it. US Treasury 10-year yield is lower at 1.81%, and that's an 8 basis points fall. Gold is up today, up $9 to $1,472 an ounce. And US oil prices are a little softer today at $57 a barrel. The Brent benchmark is just on $62.50 a barrel. The Kiwi dollar is lower today at 63.7 US cents, having weakened overnight. On the cross rates, we're holding at 94 Australian cents, and against the euro, we're soft at 57.9 euro cents. That puts the trade-weighted index just on 69 and a 30 basis point dip on a day. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.